If you can hear me this time, kindly signify. Okay, so I want to believe the network is working better now. Hopefully. So sorry, my network is having issues. I don't know what's wrong with my Wi-Fi. So I'm just going to start again. Let's say that we started 7:30 this time. Hello everyone, my name is Achieva Omobajeso and I am hosting Financial Independence with Achi, right? And today we're talking about introduction to wealth building, right? And firstly, I'm going to say what is wealth in general. Definition of wealthy can mean different things to people, right? But at the same time, it's being able to afford whatever you feel like or want to afford at a particular time. So wealth building matters because inflation eats away like money, our savings, and all of that. And it's not just about saving money, it's about being able to invest the money and protect the money. As a 9 to 5 person or a business person, right? Your business or your 9 to 5 salary or earnings is your what do you call it? Is your active income, right? And that's not just what would make you wealthy. Yes, your business may be doing really, really well and you may be making lots of money, but when you multiply your wealth is where the real money is, because that's not your only source of income, right? Whether you're a 9 to 5 person earning small income or earning lots of income, you can still start building your way to wealth. So you can take out portions of your salary for savings, for investments, and all of that. That's totally fine. So before you're able to invest, you should probably have like a portion you've been able to save consistently, right? And many of us don't know how to save. We just save, and our savings end up saving us. And that's not supposed to be so. I used to be an addicted saver where I could save like almost any amount it told me to save, but at the end of the day, I find myself going back to my savings to save me. So, what did I learn to do over time? Instead, this was even before I started my business. I had been like a saving addict since I was really young. And then one day I spoke to myself and I'm like, why do I always keep saving? And at the end of the day, I'll go and spend this money and then um, it's worth nothing at the end of the day. So I learned to start saving strategically, right? I planned my savings. So whatever comes into my account, I save like a portion of it, a percentage. Yours can be 10%, 20%. I know people that do as high as 50%. If you if you don't have so much responsibilities, then you could definitely choose to save more than usual. Do you understand? So basically, while we are still at it, while we're saving, we should also learn to invest a portion of what we've saved, right? So the money don't just get eaten up by inflation. So inflation eats away savings in general, because sometimes some saving platforms may not even give so much high interest, especially people that use the banking apps to save. Still saves in commercial bank app, where we know that um, they would definitely take out Sorry. So definitely at the end of the day, you have to learn to invest from whatever it is that you're saving. So your job income, or that's your business, your 9 to 5 and all of that, is not enough to um to give you wealth, basically, and savings too is not enough. So we also need to learn how to invest, because wealth gives you freedom and it gives you different options to do whatever you feel like doing at any given time. So I have four different patterns. I use um, towards building wealth, which goes from earning through the active income, then to saving, then to investing and protecting your wealth. So for protecting your wealth, a lot of people don't take it too serious. Oh, I'm going to get that soon, right? So when you earn from your active income, you take out a portion from your savings and put it out there, right? You take out a portion of your savings. It could be 10%, it could be 20%, you could do more than that at any time, right? But just make sure it's nothing less than 10%, and then you separate it. You can either put it in a separate account or a high yield savings account like the PiggyVest, the Optimus, and CarryWise, and all of that. Do you understand? Then when you save this money, you can either save a part of it and invest a part of it, or you have a percentage you use for savings and a percentage you use for investment. Or you can save, then once you've saved and accumulated, you can then move it to investment. Okay, so we have different investment options ranging from the fixed incomes like the treasury bills, the commercial papers, the federal government bonds, the federal government savings bond, and so much more. Then we have the equities, we have the stocks, and the mutual funds. Okay, so um, wealth is not just about making money; it's about growing and also keeping and protecting it. Right. So we always thought about how to So we always thought about how to create wealth. That's our active income, be a diligent worker or have a business. But we never thought about how to multiply this wealth or how to maintain this wealth. So multiplying the wealth is investment, right? And maintaining this wealth is you protecting it with things like insurance. I know Nigerians don't take insurance seriously, but trust me, insurance goes a long way. I gave an analogy earlier and I'm going to go over it again. I said recently, I have a friend that had an accident with his Benz, right? But the person that hit him was driving a Toyota Corolla, and this person was at fault when he hit him, and the Toyota tumbled, and it was almost beyond repair, honestly. Meanwhile, him that was driving the Benz was not bothered even after like the front of his car had issues and all of that. But the person that his car tumbled and all, thank God he came out fine. He was still blabbing and was trying to claim his right, blah blah blah. Meanwhile, he was the one at fault. But when everyone asked why the Benz guy was not upset, it was like, oh, his insurance is going to cover it. This is one thing that differentiates the rich people from the poor people, because imagine working for so many years, gathering money, and then one nonsense thing happens, like health, like accidents, and all of that, and they take what you've been building so far just to fix it. It won't make any sense. Meanwhile, the Toyota Corolla guy did not have insurance for his car, and his car was even more damaged than the Benz car. So, what do you do in that kind of situation? Meanwhile, he would have actually still helped this Corolla guy to fix his car, but he was making too much mouth. So at the end of the day, this money has to come out from the driver's pocket, right, to fix whatever it is, or buy a new car if the car is beyond repair. So imagine a situation where you're going about your day, working so hard to gather money, and then next thing, one accident or I'm not wishing bad on anyone, but life happens, right? Or even health and all of that, and then you find yourself spending all you've made. When there's something like health insurance, there is life insurance, there is car insurance, there's even house insurance, like properties and all of that. Even for businesses, there's insurance that protects your business properties. So in case there's a situation where the place caught fire and all of that, there's insurance that covers those kind of things. But Nigerians don't trust insurance companies. I don't know why, but it's not a scam at the end of the day. But yes, it actually works. Okay. So um I've had like three different kind of mindsets that has helped me to create wealth over time. And the first one is delayed gratification. Anyone that knows me well knows how much I talk about delayed gratification because it helps a lot and it goes a long way. There were things like back then that I really, really wanted. I could have gotten them, but I knew that if I get them at this point in time, it may take all I have and I might have to either start from scratch again to build another one. So instead, I delayed it and invested those kind of money into things that would multiply what I have already. And now those things I can afford them in like multiple folds. Do you understand? Instead of just instead of back then where if I had afford stuff then I would not be able to get anything else. I'll be very broke and all of that. Now, even if the price has increased, I can afford a lot of them. Do you understand? That's delayed gratification. So before you spend that money on frivolous things, you ask yourself, is it worth spending money on right now or not? If it is something that you know spending that money would not make any sense at the end of the day, is it going to bring you more money? Then try your best to avoid it. So those small 5k there, 10k there, you say, well, I cannot kill myself, only live once. Trust me, if you are putting those money in like proper investments over time, it would make sense at the end of the day. Do you understand? And the second thing that has really helped me with my mindset of wealth is compounding. Compounding is very, very important when trying to create wealth, right? Compounding is very important when trying to create wealth, and a lot of people don't realize it. When you are saving as little as 50,000 naira every single month from your income, for example, in like the next 10 to 20 years, you'll have millions of naira sitting in your account because of interest and compounding, and it's very crazy. But who would have believed that that small money you're putting in would actually yield to something bigger over time? So the day you learn to harness the power of compounding, the better for you. Okay. So, and another thing is risk awareness. You have to be aware of the type of risk appetite you have. For example, are you a low risk investor? Are you a high risk investor, or you're a moderate risk investor? Like me now, I've studied myself that I'm a moderate risk investor. I cannot take high risk type of investment. I can't do it. And at the same time, I'm not so much of a low risk investor because I still want somewhat of a good reward at the end of the day. So you ask yourself, which of them am I? What do I want to do for myself? So when you decide, oh, you're a low risk person, you know what kind of investments that work for you. Then if you decide, oh, you're a high risk person, you know the best investment for you, or you are a moderate risk person. Do you understand? Also, there's a very high cost for financial ignorance, and the first one is inflation. Inflation is literally a silent thief that takes money away from people, and then in your mind you're like, if you don't get that thing right now, by like next year it's going to be, the price would have increased, right? And then at the end of the day you'll be paying more for it. So inflation is a very big thief. And then especially in Nigeria, where naira is very volatile and we are scared of losing our money over time. So you have to learn to invest instead of letting your money sit in your bank account and inflation is eating up this money. Then the next one is you falling for all these investment scams. It's a financial ignorance, because instead of you to go through the right paths, a lot of Nigerians, you people like sharp wealth. Wealth is slow and steady. It is nothing to rush yourself into and say, I want to make quick money. It's so easy to scam Nigerians if you want to scam Nigerians, because they like fast wealth. They want to rush and get it. Meanwhile, they don't want to understand that it's slow and steady. And another problem I really have with Nigerians is you people like to jump to invest in things you don't understand. So if you want to invest in anything, before you invest in anything, make sure you have knowledge about it, at least basic knowledge, how it works. Even if you don't have like in-depth knowledge about it, at least try to understand how it works and how you can make money from it over time. Okay, so don't just go in blindly because someone says there's money there and then you go in blindly. I would actually give an example, right? As much as stocks gives good return, stocks is not a get rich scheme where you just rush and say you want to make money now and then you make money now, right? But yes, when you have good knowledge and then about it, you would know the kind of companies that would do well ahead of time. Let me give an example. Last year, MTN was actually doing bad. Last year financially, they were not doing so well. In fact, MTN stocks dropped from, like, was it 200 and something or 300 and something, down to 180, 160. I bought MTN last year initially at maybe 250 or 3 something, I can't remember, and then I sold it at 1 something. So now when I was selling, some people were buying as per they want to start investing in MTN as at then when the price was lower. That's a long-term investor right there. Someone that is buying at that low cost, right? And then there are some of us that bailed out because we could not bear the loss. But guess what? As soon as I saw the news that they were considering this one, they've not perfected, the government had not approved it, but they were considering increasing their tariff plan. This was what made me to go back to invest in MTN. And I bought MTN below 200 naira. Now, when did people start rushing to buy MTN? First set of people started rushing to buy MTN after they had approved increasing their tariff plan, right? Some people went to buy. That's good. So some people started to buy at 230, 240, and all of that. The second set of people are the people that they've probably complained since that, oh, why will MTN increase their tariff plan? This, that. Nobody is in business to lose money, right? So definitely they need to make money. Nobody saw when they were losing money last year. Only their investors did. So you cannot tell me that because they want to satisfy with the masses and that there's no money in Nigeria, it now means that they should be running at a loss and all of that. No, it's not possible. But people are still complaining that why did they increase their tariff plan, blah blah blah, the data is expensive, the country is bad. And at the end of the day, right, those kind of people rushed to buy into MTN stocks later, maybe when MTN was already like 3 something and all of that. And when I spoke up about MTN stocks, MTN was over 350 naira already. I know people that went to rush to buy MTN at 400. Some people bought at 450. Some people bought at 480. Meanwhile, I entered the market before it entered 200 naira. You're not supposed to rush and chase stocks that because I spoke about it, that I had made money from it, means you should rush and quickly enter to make money from it. That's actually how you lose money. Lack of knowledge. So a lot of Nigerians rush into things without understanding how it works. Instead of you to ask the basic questions like, okay, what other company can I invest in? I realize this one has gone up now. Is this still a good time to buy it? No. Instead, Nigerians have, let me quickly rush and go and quickly buy MTN. Or they said they're making money there. It doesn't work that way. But a lot of people rushed into it to see if they could make money. And guess what? MTN touched an all-time high of 480 and started like withdrawing back, right? Entered 450, entered below 450. So imagine people that bought it at 480. And now that it has not gone back to that 480, they've lost money. But then they will want to insult people that spoke about MTN stocks, that MTN was doing well. They will want to say it's their fault for talking about it. Meanwhile, it is your fault for not seeking knowledge first to know if it was the right time for you to buy that stock at that particular time. Do you understand? Then another thing is, another cost of financial ignorance is you do not even invest at all. You live from paycheck to paycheck, right? I've seen comments of people saying things like, "Oh, that all this stock money thing is increasing based on inflation. This, that." Let me try to increase my voice. Okay, so I've seen people say they'll rather leave money in their account instead of putting it in stocks, blah blah blah, or putting it in things like mutual funds and all of that. That they'll rather see their money in their accounts because they are scared of losing money. Rich people are not scared of losing money, and that's how they actually make money, right? If you don't take risk, you would not make money. And when I say take risk, take calculated risk, not anyhow kind of risk. You should be willing to take calculated risk. That's how you make money. You don't leave money sitting in your bank account because you are scared of losing it. You need to learn to give out so money can come back to you. You use money to make money. Money does not sit in your account and grow. Banks these days hardly even add interest on the money you leave in your account. So what exactly are you doing with the money in your account? I would rather invest. For example, in 2021, UBA was 8 naira, right? I have a friend that bought 8 million naira worth of UBA when it was 8 naira. Today, UBA is about 49 naira. Is 8 million naira 4 years later? Is 49 million. Please come and explain to me what kind of inflation wants to happen to Nigeria that something worth 8 million naira then would be worth 49 million naira now. He has beaten inflation at the end of the day. So just even take it as you bought a land for 8 million and 4 years later you are selling that land for 49 million naira. Do you understand? But no, some people rather leave that 8 million naira sitting in their bank, no interest. Bank is removing charges from that money for 4 years and it did not grow at the end of the day. So who is losing? And sadly, inflation has eaten up that money because what that 8 million could do then, it cannot do it now. Do you understand? So for stocks and mutual funds, what is stocks in general? Stocks is basically you buying a piece of a company, right? You're acquiring a piece of a company, and you are obligated to you're obligated to have extra benefits from their profits, losses, and even their assets. So you have access to these things, right? So you are owning a part of a company. So if you hear something like, "Oh, Dangote is the biggest shareholder of Dangote Group," because he has it as stocks. Yeah, Tony Elumelu is the biggest shareholder of UBA. That's stocks. Do you understand? So if you hear something like a particular company or a particular person owns a portion of a company, it's still stocks. The only difference is either it is a public this thing or it is private. So it's like you going to meet your friend and saying, "I want to give you money for your business, and if I give you this money, I want to be a shareholder in your company," meaning if you make money in your business, I also make money. You'll be giving me money, and if you lose money together. Do you understand? So that's partnership. You're putting your money into another company for them to use your money to build that company up. So if you don't have the strength to start your own business, you can just say, "Okay, instead of starting my own business, let me put this money into another business that is running already and make money from them." I'm trying my best to be louder than this, but okay. I'm just hoping that I am a bit audible, right? So then we have the mutual funds, right? Mutual funds is basically a basket of stocks and fixed incomes. What are fixed incomes? Fixed incomes are kind of investments that have fixed rates at a particular period of time. So examples of fixed incomes are like treasury bills, the commercial papers, the federal government's bond, federal government savings bond. So these type of fixed incomes give fixed rates on a particular amount and a particular period of time. For example, if you want to invest in treasury bills and they tell you that, okay, per annum it is 20%. So meaning for 1 year, if you leave your money for 1 year, you get 20% of your initial investment. So meaning if you put in 10 million, you're expected to get about 2 million naira on your money, right? That's fixed income. Your rate is sure. Stocks is not a fixed income. So meaning your money could actually go higher or it could go lower. There's no limit to how much you can make in stocks. You can make times whatever in stocks. The highest you can lose is what you invested. But there's no limit to how much you can actually make from it. Do you understand? So mutual funds bring fixed incomes and stocks together as one for you to invest in. So help you to um this helps you to invest in different assets as one instead of having them separately. Okay, and they are also managed by professional asset managers. ARM is supposed to join us in this session, but they may not be able to join us today. Maybe in our next session they would be able to join us. Okay, then there are other wealth building options like the real estate. So there's real estate and real estate investment trust. So if you don't have money to buy actual lands and properties in general, then you can buy the stocks of these real estates. Real estate stocks, they are obligated to pay out about 90% of whatever they make in their business as dividends. And I forgot to mention that for stocks, it's not only through dividends you make money. Some people believe that if they buy stocks, it's only dividends they should be earning from stocks. That's not true. You are supposed to make money through capital appreciation, and that's the number one way of making money in stocks. Meaning you bought a particular company's stock when it was 50 naira. If today the company stock is worth 100 naira, that is capital appreciation. You've earned 100% of your money back. Do you understand? So you can choose to sell it. They are not going to send the 100 naira to your account. You are the one that will sell it. When you sell it is when the 100 naira is yours. If you leave it, if the money continues appreciating, good for you. While for dividends is the one they will send straight to your account for telling you thank you for allowing us to use your money. Dividends is basically when companies share part of their profits to their shareholders. Is completely different from how much you've invested and how much your money is growing. Do you understand? So there are two different things entirely. Capital appreciation is different from dividend. So if I tell you that, oh, I bought this stock at 2 naira and today this stock is 10 naira, that's 400 to 500% of my money that I've made. But until I sell, before it is sure that that is my money. Do you understand? Because it could still go up or it could still come down. So when you sell at 10 naira, then that is how much you actually made, right? Then that's when the money will be sent to your account. But when you don't sell and you leave it, you should not be expecting money from nowhere that because it is 2 naira to 10 naira, you should be expecting money to appear in your account from nowhere. That's not true. It's dividends that will come in that way. And paying dividends is not compulsory. Companies are not, like, it's not compulsory. So some companies don't pay dividends because they put in back their profits to grow. So instead of sharing it to their shareholders, they need more money to push their business. So they put it back in. It's mostly strong companies that stick to paying dividends consistently. And they cannot pay dividends if they are running at a loss. For example, I've gotten complaints from people that said, oh, MTN did not pay dividends in like the past 2 years. Yes, MTN did not pay dividends in the past 2 years because they were running at a loss. Do you understand? MTN was running at a loss around that period. You can't give what you don't have. So how do you expect them to pay you dividends if they did not make money in the first place? But yes, maybe now that they made more money this year, because in July, or was it June or July, there was a release of news that telecommunication companies made over 60% profits compared to the previous year, just within January to June. So definitely it's possible that next year they may come back up with paying dividends. Dividends is different from capital appreciation. Your stock goes from 200 naira to 1000 naira does not mean that money will enter your account. It's you that will sell it first before it enters your account. If you are still holding that company, it means you've not sold that stock and the money yet is not for you, like it's not in your account yet. But yes, it is part of your assets, but the money is not in your account. So the one you're expecting in your account is dividends, which is them just sharing a portion of their profits. So dividends is not the only way you make money through stocks. And I'm saying that again because I'm seeing someone asking the question. Not all companies pay dividends, and some companies that pay dividend this year does not mean they'll pay next year. It is not compulsory. So meaning if they run at a loss, they cannot pay you dividends. It's giving it to you from their profits, not from their pockets. There's a difference. So another type of wealth building option is the fixed income, which I've already briefly explained, right? For example, we have the federal government savings bond and federal government bond. These ones are directly from the federal government. You give your money to them, they tell you this is the rate you are getting within this period of time, right? And that's what you're expecting. I know Nigerians don't trust Nigerian government, but please, they can never default with fixed income. It's not possible. They can never default to fixed income. So at the end of the day, they would definitely pay you your money. Then government cannot run away with your money. How much is your money compared to what they have? Do you understand? In over 50 years of doing fixed income in Nigeria, that's both commercial papers and the federal government bond and federal government savings bond, they have never defaulted in giving anybody back their money. Okay, so don't be scared to invest with the government. What did the government use treasury bills? Because treasury bills too is owned by the government, right? You get it directly from CBN. What did they use this money to do? They use it to fix road. They use it to build all these government hospitals and all of that. So you are giving them your money as loan, and they will pay you back your money and also give you interest on top of the money. Do you understand? So okay, someone is asking, will I earn dividends if I purchase mutual funds that contain dividends paying stocks? Yes, you will. They pay once a year. Do you understand? They pay once a year if you invest in mutual funds that have stocks in them. We have three types of mutual funds. The conservative mutual funds, which has just fixed income, they pay you your dividends every 3 months, and your dividends is basically capital appreciation. So that money that it has appreciated for in 3 months is added to the money you initially invested, and this money too starts to create its own interest. Do you understand? Then there's the moderate risk one, or balanced mutual funds. This one has a bit of stocks and fixed income, so it can be balanced like 50% 50% stocks, 50% fixed income, or 60-40, 51-49, around that range generally, right? Then the third one is the aggressive fixed income. Aggressive mutual funds. Aggressive mutual funds means that there's a higher percentage of that money in stocks. So stocks can be as high as 70, 80, 90% of your money there, and the remaining 10 to 30% is in fixed income. So meaning if you put 1 million naira in mutual funds, for example, and you put it in the aggressive mutual funds, about 700k to 900k of that money can be in stocks. The remaining 100 to 300 can be in fixed income. That's for the aggressive. Do you understand? So If you don't like risk at all, you can stick to the conservative one. And if you are okay with a little bit of risk, you can stick with the moderate fixed income. Okay, I hope I answered the question, Okwemikon. Then other ways to build wealth is also through side hustles or even digital businesses. So aside from your business, your actual business or your 9 to 5 that gives you the most money as an active income, you can also have side hustles that may even end up paying you more than your actual business does, right? So these side hustles could be like a skill you've developed. You can sell your knowledge about that skill, or you even singing. Like music is a passive income, do you understand? Because even in years to come, for example, it's like all these Davido songs and all of that, those old songs that they sang like, let's say, 10 years ago or so, if you go back to stream those songs online, they'll still make money from it. That's passive income. Royalty and all of that, that's passive income. Do you understand? If you write a book today and you sell it even in the next 20 years, you're still making money from a knowledge that you dropped a long time ago. That's passive income. Do you understand? So aside from what actively brings money to you right now, you can choose to do something else that can be bringing money on the side. You could learn a skill like graphic designing or other digital skills in general, right? And if you just feel you are very good at something in particular, it could be anything, like maybe your hobby, photography, all those things. Just monetize it, and trust me, you will make lots of money from it, because a lot of people are willing to learn that particular skill. And it's not everything that you can go and sit down and learn from YouTube and you think you'll be perfect at it, right? So sometimes you need to learn from people directly so you can tap into that knowledge and ask the necessary questions. So also, common mistakes beginners make before investing, or when they want to invest, or even after they've invested, all the same thing: investing without knowledge. And I said this earlier. See, Nigerians have this problem, and their problem is they can get scammed easily. You people just jump, and because somebody said this thing is good, you don't even go and verify if it's good. You just jump in and you go and start investing in it. That's why it was very easy for CBEX people to scam Nigerians of trillions of naira, because one person just say, you make sharp money. Nigerians like fast money, and it's not good. Even stocks is not fast money scheme. This is what the rich people in this world used to build wealth over time. They did not rush themselves into it. So don't rush yourself into it and now be expecting that you will make money. You will lose money, eh? If you don't seek knowledge for something, don't ever invest in what you do not have knowledge about at all. Don't ever invest in it, honestly. But before you put your money into anything, make sure you've learned at least the basics of it. That okay, this thing I want to put my money in, let me know the basics before I now go and throw money inside. Like the example I gave about MTN, of how I bought it below 200 naira and some people were rushing to buy it at 480. If you want to seek knowledge in the first place, you should not have even bought it at over 400 naira because it has rallied up. But because you did not seek knowledge, you want to rush to buy it because you're waiting to make money. Now MTN has retraced back to below 450. What will you do if you don't make your money back at the end of the day? So another thing is, you don't just follow hype of a particular thing blindly without seeking extra knowledge from it. So just because someone talked about it and said this would make you, this person, like they've made money from it, does not mean that that is also a good time for you to make money from that particular thing. So you have to seek knowledge and be sure that this thing you want to do, you can still make money from it right now before you just jump into it. Do you understand? Also, do not ignore risk management. How do you manage your type of risk? Do you want to put in money that you can easily forget about, or you want to put in money that will give you headache if you lose that money. So when you want to invest, make sure you're investing type of money that even if anything happens to it, at the end of the day, life still move on. Also, you should be able to diversify your investment portfolio. Don't put all your eggs in one basket by saying, I want to go and invest all my money in stocks, I want to put my money in mutual funds, I want to put my money in fixed income. No, learn to diversify across different investment options. Okay, so at the end of the day, if you don't want to lose money while trying to make money, learn to seek knowledge. It's very important. So anyways, I am just going to summarize everything I've said so far, and I'll take few questions. Okay, so remember that building wealth is very important so you can beat inflation, and also to afford things that you really want to afford over time, right? And a formula to build wealth is for you to earn money through your active income and save, then invest, then protect this wealth with things like insurance, trust funds, wills, and all of that. For example, if you don't have a will and something happens to you, anybody can come and take over your wealth, someone that you may not even want to take over your wealth. So you need to have wills also. Okay, and that's what ARM would help you with, but unfortunately they were not able to join the second session. They were at the first one before I changed the link, but that's fine. And also remember to learn to seek for knowledge later on. Okay, no matter what happens, before you put your money into anything, make sure you invest in your knowledge. Okay, then different investment options are the stocks, the mutual funds, commercial papers, the treasury bills, the federal government savings bond, the federal government bond. For stocks and mutual funds, you can start with as low as 5,000 naira. With federal government savings bond, you can start with 5,000 naira, right? While for commercial papers, it depends on the platform you are using. Some platforms allow you to start with as low as 5,000 naira. For example, PiggyVest investment option is actually commercial paper, so you can choose to use PiggyVest investment option. Okay, then some platforms that buy outrightly from these companies is minimum of 5 million. Some platforms allow you to buy with minimum of 500,000 naira, but remember, with as low as 5,000 naira, there are different options you can engage in. For treasury bills, if you are buying directly from your bank, it's 100,000 naira. Some fintech platforms can allow you to start with 10,000 naira. So anyways, if you have not gotten financial independence with Archie's course, then you are definitely missing out, because this course explains in depth about fixed incomes, about equities, about saving, budgeting, all the investment options, including investing in gold and all of that. And it shows you how to protect your wealth, how to compound. Okay, I would get to the questions really soon. So basically, if you've not gotten the course, you are actually missing out, because that course is one way to wealth. Honestly, if you want to create wealth very fast, then you need to get financial independence with Archie. It will help you understand in depth about savings and what pattern you should use in saving. Now, when I created this course, I didn't just do it as, oh, go and read note and whatever. No, just as how I'm speaking, right, is how I was talking, explaining each of these things I'm talking about, and then you listen, you watch, and you learn from it, right? how to save, how to budget, compounding, how to invest in different investment options, the stocks, the mutual funds, the commercial papers, the treasury bills, federal government bond, federal government savings bond, gold, and other commodities that you can actually invest in, right? It's all in that, it's all in that course. Retirement planning is in the course. Protecting your wealth is in the course. It's a pre-recorded video, right? It's an audio visual book. It's not just you reading this thing and trying to understand. No, I'm literally talking and explaining in the course. Do you understand? So if you really, really want to change your finances, then you should actually get the course. And if you need if you feel that you may not have the time to go through the course and you need maybe to have a conversation with me one-on-one, you can book like a one-on-one virtual consultation. Right now the course is discounted at 25,000 naira instead of 50,000 naira. But if you attended this session, you can reach out to me to purchase it at 20,000 naira. Maybe I'll just put it on the group before like this weekend is over. You can get the course for 20,000 naira instead of the 25,000 naira right now, right? So that's extra bonus for people that attended this class. Okay, I would post it on the community group also, so anyone that is getting it this weekend before Monday, you can get it at 20,000 naira instead. The original price of this course is actually 50,000 naira, so it's currently discounted at 25, but you can still get it for 20. So let me just quickly go over questions that some people have asked. I've answered this. Yes, I will try my best to upload the video on my page, so that on my YouTube, so that you can watch it later, and I'll post up the link so anyone that wants to watch it later can watch it later. What's the minimum one can invest? I've already explained that. For stocks, mutual funds, and which other one, federal government savings bond is 5,000 naira. You can start with upwards. For treasury bills, some platform allows you to start with 10,000, some allows you to start with 100,000. If you go to the bank, it's minimum of 100,000 naira, right? Then yeah, depends. Then the federal government bond, this federal government savings bond, this federal government bond, they are two different things. Federal government bond is from 50 million naira upwards. But yes, you can start with the one of 5k if 50 million is not your thing yet. Then what company is best to invest with at the moment? I cannot tell you, I'm sorry, I can't tell you a company to invest in unless you're my inner circle member. I'm not going to lie, I'm just going to be very honest with you. So reason is, I do analysis on each of these companies, and I want to be sure that in the first place, you've either gone through the course or a learning process to understand the wordings I am using to explain why I said you should buy that stock. Because if I start using some kind of like, oh, PB ratio, this is that, some people get confused and you start asking me questions like, oh, what is this, what is this, when you could have easily first learned the basics. Do you understand? So when I'm talking about these things, you easily understand what I'm talking about. I cannot just actually tell you go and buy this particular stock. I will give you reasons on why that is a good one to buy at this moment, not just for you to rush inside and say you make money. Now if I tell you to go and buy this stock, will you know when I tell my community members to go and sell it because it will do bad soon? No, I will forget that I told you, and I will not come back to tell you sell it before it goes back down. No. It's basic common sense, right? That I will not just tell you go and buy that particular stock, blah blah blah. Also, I don't just give random stocks. I have to be sure of your risk appetite. So even the list of stocks that I give to my inner circle members, right? I state it for them. This one is low risk. This one is short term. This one is long term. This one is mid term. So if you know you don't like risk or anything, you can leave it for long term. Do you understand? So not the one that will go and recommend a long term stock for someone that is looking for sharp money, or go and invest and tell you short-term stock now for someone that is looking for long-term investment. Later the money will now go down after that. I know they do like that too. So um I hope my voice is loud again. How do one read and understand company account statements? This is also something you learned from my inner circle, right? I use TradingView. You can use the paid subscription if you want more this thing on TradingView. I mean, on TradingView app, there's free option, there's the paid one. I mostly use the paid one, right? So you can get in depth of information about this company. I check their financials. I check um their market cap, their free float. So free float too is very important if you want to know how liquid a company is. Any company that their um free float is below 19%, even though 19% safe is a lot, there's a very high chance that that particular company is not liquid. So some people rush to buy stocks, but they don't even check, okay, the basics of this company. What's their free float saying? What's their market capitalization? If you're a long-term investor, you have to consider how much debt this company is in. Are they in serious debt, or they are managing by themselves? For example, someone asked about Ella Lakes and TIP on one of the community group yesterday. And as much as I like Ella Lakes, I bought Ella Lakes at, was it 3 or 4 naira last year? Sold it at 12 naira, right? People are still rushing to buy it now. And I think right now it's like 14 or 15 or 16 naira. At some point it touched 19 naira, right? But people are still rushing to buy it. They're not checking the company's fundamental. Ella Lakes is in serious debt. They've been using all the money they've been making to buy more lands. That's fine. I know this company would actually do really well in like the next 5 to 10 years, but is it everybody that is that patient to wait to that point? So I will not just randomly recommend stocks for anybody without making you understand the in-depth on how all of these things work in the first place. So I would not want to say I want to invest in a company for long term that I'm clearly seeing that this company is in serious debt and they've not been doing so well even in the past 5 years, right? But then there are other stable companies that they've been doing well over the years and their financials still look really good. They have less debt, they have enough money, their cash flow and equivalents are like way higher than their debts and all of that. So if today something happens to them, they can easily pay their debts and still pay you, their shareholders, your money back. Do you understand? But some companies are in serious debt that if anything happens to them, they cannot pay their debt and they cannot even pay you as their shareholder. So you have to learn these basic things about companies. So if you want to check companies account statement and all those things, you can either use the NGX platform. Well, that's the name. NGX, this thing. What do you call it? I can't remember the exact website, this thing. But if you type NGX, you'll see it. You can check the NGX group, their website. You can check any company's financials, their recent this thing and all of that. You can also use TradingView to check, okay? Sometimes their values may differ because I don't know how they update their thing, but some websites, their values may differ one way or the other. But there are other ways you can calculate it by yourself to know the correct one. Then, which other question? Yes, it is the course I'm talking about is pre-recorded. It is an audio visual course. You are seeing what I wrote and I'm also explaining my voice. You're seeing my face. I'm explaining it to you. Do you understand? So yes, it makes you understand this thing more in depth. If you have any question, please let me know so we can round up like in less than the next 5 minutes. Okay. If there is no question, would soon end the session. So like I said, if you've not gotten financial independence with Archie's course, you're missing out. You should be in my inner circle group if you want to easily have like stock recommendation that fits your risk appetite. That I share it there daily. We grow together, we learn together, and if you want to book a one-on-one consultation with me, you can also reach out to me so that I explain these things like in depth for you to understand. So the course, instead of the 25,000 naira that is currently discounted at, it's for 20,000 naira this weekend. Okay, So I'm going to post it up on the community group, and this weekend you can get it. By Monday the offer would not be available anymore. Okay, so my community group, you can reach out to me. You can reach out to me either on Instagram or on WhatsApp if you want to have access to my general group. It's free. On Instagram is the last link in my bio for the free group. But if you want the inner circle group where I drop updates and all of that, when I mean updates, I mean this stock is going to go up before December. You're going to make money from it. That's something you get from my inner circle. On the general group, I just drop like basic stock tips or investment tips in general, and basic companies, right? But I will not come and tell you that this company is going to do well before December. That's for my inner circle members. That's the perks of being a member. So yes, and I am sure that everyone is definitely getting value from the inner circle group, because no one is left out. Everyone gets answered and all of that. Can I buy the course now and go through it later in the year? Yes, you can buy the course now and go through it anytime. You can listen to it at any time you want, honestly. You can actually listen to it at any time you want. Okay. I should have added it under the description of this live video, but I created this impromptu link instead of the other one. Okay, free float, market cap, debt volume, any other major point to check. PE ratio, PB ratio, which other one? There's so many more that you would actually have to look out for. You're not just going in blindly. Also, for short-term stocks, I use more of technical analysis, the whole triangle thing, cup and handle, or the... See, all this knowledge, people would think that it just came to me for free. Some of us, we also paid to learn this thing. So I'm wondering why some of you expect me to give out all of this knowledge for free when you're not my family member or my best friend. I'm sorry. I just had to say it. But like, even the ones I'm giving out for free, are people not happy? Eh? Well, you expect me to give out every single thing that I know that it cost me my time, my money, my energy, every single thing for me to learn about them. Which other questions? There are many apps claiming they can what? Use and shares. How do it wants to use? So any app that is not verified or regulated by SEC, then I don't know what you're doing with that app, honestly. So SEC are the regulatory body for anything investment platforms in Nigeria. CBEX was not regulated by SEC. That's why they were able to run away with people's money. If they were regulated by SEC, they cannot run away with your money because they will catch them. Do you understand? So while the ones for like saving and all of that, those ones are NDIC insured instead. So good apps. I recently dropped on my Instagram, like I mentioned, like 6 apps you can use for investment. There's the Bamboo, there's the ARM one, there is there are different apps. There's Chaka, there is Afri Investor, there's Merry Trade, there is Atlas. There are so many platforms, so just pick the one that works for you. Like me now, I use Bamboo and ARM one, and it works fine for me. So you don't need to have so many apps to get started. You can have few apps and you're working with them. I even used to advise 2 apps, especially if you want to be a short-term investor and also a long-term investor, because you have to know the kind of investor you want to be. You want to do the two. You want to do only strictly for short-term, that's trading. Or you want to do for long-term, that you live for so many years and you make so much money for so many years. Okay, so it depends. For example, I recently saw a tweet that someone dropped on Twitter some time back, I think early this month or last month, and then person was like, oh, his dad bought Okumu oil stock at 25 kobo some years ago. That was in the late 90s. Today, Okumu is 1,020 naira. That's massive wealth. 25 kobo to 1,020 naira, meaning even if it was, let's even say 1 naira, not even 25 kobo, and he bought 1 million naira worth of it at 1 naira, this 1 million naira would be worth about 1 billion 20 million now. That 1 million naira in the late 90s is worth over 1 billion naira now. So see why people invest in stocks. Like, you make bastard money from it, especially if you invest in good companies. Do you understand? So now imagine the 25 kobo that person invested in instead of 1 naira. It means it's 250k. If person put 250k at 25 kobo, that's what is worth over 1 billion naira now. It's crazy, but it happens. Not every stock can do that well, but at the same time, that's lots of money. If you had invested about $1,000 in Nvidia, for example, about 4 years ago, now it's almost worth $400,000. These are things you do as a long-term investor. You make so much money in the stock market, and this is why the rich keep getting richer, and the poor that are scared of losing what they already have, they don't invest and they keep being poor. Sorry to say. So aside free float, market cap, debt volume, any other major thing, I thought I've responded to this. I said PB ratio, PE ratio. So you're checking profit to book, you're checking profit to earning. So there are different things you look out for, honestly, and I can't start thinking all of that off head right now. You also have to check what else again. So for like the free float, like I said, the free float is you considering how liquid the company is. So if you're seeing a free float of, like, let's say 70 something percent, 90 something percent, the company is liquid like mad. Especially the banking sectors, they are very liquid because most of them are top index 30 stocks. So when you're index 30, those are like top 30 companies in Nigeria. So it means you're going to make like really good ass money from it. And they are very liquid, right? Do you understand? So what else again? There's so many things to look out for, and honestly I can't start thinking of that off head right now. But yeah, what else again? Any other question? It's over 1 hour now, and we would want to round up the session. Any other question? If there's no question, we can finally call it a day. I would send the payment details for the course going for 20,000 naira. I'll post it on the community for people that want to get started and take their finances seriously. Okay, so I guess that will be all for today. Run into your DM. So if you have any more questions, let me know on the group or in my DM. Okay, see you in our next session, whenever it will be. Bye.